banks. Motilal Oswal is bullish on PSU banks. They believe that sustained and consistent performance on delivering healthy return ratios can result in a further re-rating of the stocks. Nitin Aggarwal, the head of banking, insurance and financial research at Motilal Oswal, joins us now. He's the author of that report. I went through that entire note, Nitin, and very interesting, you mentioned that the profitability of the top 7 PSU banks has improved to 90,000 crores in FY23 from a loss of 59,500 crores in FY18. Don't you think a lot of it is already in the price? Because we've had a serious rally last year. Or do you think that this is the start of a structural upcycle?
Yeah. Hi, Sonia. Thanks for having me. So we believe that PSBs, while they have come a long way in terms of earnings, we are now looking at the earnings reaching close to 1.1 and thereafter 1.3 lakh crores. And the ROAs will improve towards 1%. So the bigger question is it's not a one-off that they have come to this level. Is this sustainable or not? And if we look back and take you from history, then during 10 years from FY4 till FY13, these banks delivered 1% ROA on an average. So, and if we project what we're projecting today, based on that, we are seeing these ROAs to reach 1%. Some of them are already making that number, and that will help them drive further re-rating. Because during FY17 till 21, there was hardly any adjusted book value growth for these banks, given the higher NPAs. Now that trend has certainly changed, and we are looking at a ABV growth which is approaching close to private banks, almost around 18%. And we believe there is to this re-rating therefore.
So which are the steady, names? The problem here is you're always looking back over your shoulder, right? Given the experience over the last 10 years. Is there something coming? Is this just a move which will not last? And is this more cyclical, right? So if you're saying none of that is true and this is they have a clean slate and a long run, which are the best names now, given where the run-ups we've seen and where valuations are?
See, in this report, we have pitched for Bob and Canara as amongst the top best bets. SBI certainly has been a top bet for all these years. And after SBI, we like Bob and Canara within these banks, wherein we expect ROAs to continue to remain very healthy. And accordingly, we are benchmarking our valuations to SBI, wherein we are valuing Bob at 1.2 times and Canara at close to 1 time.
You don't, and what I preface my question with, which is that they've got long runways, and this is not just a valuation catch-up game. That you would agree with that, right? This is more sustainable, structural.
Yes. See, if you look at what were the issues that these PSU banks faced all this while, were mainly centered around asset quality, wherein the slippages numbers were very high, the NPAs went up to double digits, and coverage ratios were far lower versus what you are looking at today. Now, the SMA numbers across PSBs, SMA2s, are in less than 1%, averaging around 30 to 50 basis points. The slippages is now less than what the recoveries and upgrades these banks are having, and which is what has allowed them to improve their GNPAs and net NPAs every quarter. So we are looking at an improvement in the asset quality every quarter. And we expect this trend to sustain while the coverages are already above 70. And therefore, this combination and the earnings, therefore, will drive further re-rating for these stocks. And therefore, we are saying that this is not a one-off where they have come today.
Okay. So your top picks are SBI, Bank of Baroda and Canara Bank, right? I mean, Bank of Baroda has doubled in the last 1 year. So at what stage of the re-rating are we in right now? You think it's a mature stage?
I think there is still some more room for Bank of Baroda because while, of course, the ROAs have come up and it's now trading close to 1 time, but I think the upsides to this ROAs can open up because if you compare as to what even the private banks were delivering, for good 5 years, private banks, some of the leading ones were delivering ROAs below 1. And now they are approaching towards 2, some of them are already above 2. So PSBs, therefore, to think that 1 will be a ceiling, we are not very sure. While 1 in itself is a very good number, until 2 years back, it was in fact an aspirational number for PSBs. But if this 1 moves towards 1.1 and above, I think the re-rating can be a bit more for these PSBs. While therefore you are right that the Bob has doubled and a large part of re-rating is behind, but we are still expecting another 30% return to come through next 1 year.
Okay, all right, we leave it at that. Another 30% return.